it would really be a wonderful marriage because it's two places that get along very well. They like each other a lot.
Well, if I may, as you know from real estate, there are some places that are never for sale.
That's true.
We're sitting in one right now, Buckingham Palace, that you visited as well.
That's true.
And having met with the owners of Canada over the course of the campaign last several months, it's not for sale, won't be for sale ever. But the opportunity is in the partnership and what we can build together.
There you have it. Our Prime Minister, measured tones, reminding the President that this country is not for sale. Let's get more from Royce Mendes, Managing Director and Head of Macro Strategy at Desjardins. Royce, I know it's politics is partly show business, but were you impressed with Mr. Carney's performance yesterday? Do you think he got the message across strongly enough?
Well, I thought the overall tone of the press conference was positive. And I think given that the only concession that President Trump asked for was friendship, we have to say that this was a good development and a step towards, I think, repairing the relationship that has been damaged between the two countries over the course of the past few months.
Mr. Trump, though, still not backing away formally. I suppose he can't be seen to do that, having repeated so often that his desire to absorb Canada.
Well, he said, it takes two to tango. And I think that implied that he's no longer discussing forcefully doing anything, meaning that, he would love to see Canada join the U.S. as its 51st state because he feels that it would be good for Canadians. But, I think he sort of has accepted the fact that that is not going to happen.
Both leaders indicating that CUSMA, the current North American trade agreement, is the way to proceed. So Mr. Trump not apparently wanting to tear up that agreement, even though he's proposed measures that violate it. Where do you think negotiations will go between the two countries? Is this going to be a lot, on possible changes to the trade deal? Is this going to drag on?
Yeah, this is where I thought the tone was really positive. Earlier in the press conference, President Trump even said that we may not need to renegotiate USMCA. That is a drastic change of heart from what he was saying just a couple of months ago. So, I think the most likely path forward is that the trade deal will be renegotiated. What does he really want from the other trade partners, Canada and Mexico? Well, he said it. He said he wants tighter rules of origin, but that mostly affects Mexico. Mexico had turned into almost a backdoor conduit for Chinese goods to head into the United States. Canada really didn't see that and wasn't criticized for doing anything on that front. What Canada, maybe needs to think about, and it's something Carney proposed yesterday, is increasing military spending, defense spending. We are one of the few countries in NATO that does not hit its 2% of GDP target. Raising the defense spending of the country could, I think, be a win-win. We could direct a lot of that spending internally to businesses that provide defense goods or services. We could also hire more staff. And, to potentially placate the U.S. administration, we could direct some spending to U.S. firms as well. And so I think that's something that is on the table. Maybe even not only hitting the 2% target, surpassing that 2% target. Carney obviously wants to keep things off the table, like supply management, the softwood lumber negotiations he wants to keep separate. But one other thing he proposed that I thought was really interesting, he's also coming with a list of asks. He didn't sit down with the president waiting for just the president to list what he wanted. Carney seemed to imply that what he would like to see in a revised USMCA would be tools or an agreement that the U.S. cannot unilaterally raise tariffs again on Canada for, let's say, national security reasons. I don't think Carney will get that. I don't think we'll be able to put that into USMCA, but it's a good start for negotiations to say, look, we've got a list too. Let's look at both of our lists and see where we can find some common agreement. I think we will find a lot of common agreement, and hopefully we can start to move forward now. Because, the first couple of months of this year were very tough for Canadian households and businesses. I'm hoping that there's a little bit more certainty in the months to come than there have been in the past few months.
I've seen commentary to the effect, though, what's the point of striking a deal with Trump? He's just going to renege on it when it suits him.
Yeah, I mean, it's a fair question, but this is the situation we're in. So you can either throw all of the toys out of the pram and say, I'm not going to do anything and I'm not going to make a deal, or you can do what actually Carney did yesterday, is go there, be respectful, let's try to work together and find some common agreement. I mean, I think a lot of Canadians are justifiably frustrated, but that doesn't mean that we should just walk away from the negotiating table. The best path forward for businesses in this country and households is to get to the negotiating table as fast as possible and work out an agreement so that we can put this behind us and we can continue to have an integrated North American economy that has worked so well for all of us for many decades.
I love the way you use that British expression for throwing a temper tantrum, throw your toys out of the pram. Those Brits, you got to hand it to them. Just give us your basic view on investing in Canadian equities right now. Are you avoiding, for example, stocks that are exposed to consumers?
I think generally speaking, there is a diversification trade going on globally away from U.S. assets, and it's happening gradually. And one of the places I think some investors are looking is to Canada. It's a AAA rated sovereign. The independence and the strength of our institutions is not in question. We just had a very peaceful, democratic election, which I think no one had any problems with the way it was conducted. This means that Canada is looking very investable again. What the Carney government needs to do is to create even more opportunities by finding ways to unlock resources or to partner with the private sector on infrastructure spending. These are things that I think can make the companies that are domestically oriented on the TSX even more attractive to global investors. With regards to consumers or retail-oriented business, interestingly, some businesses in Canada might be able to work out some deals with, let's say, if they have Chinese suppliers supplying goods to them. Because if China cannot send as many goods to the U.S. as it was previously, it has to find markets for those goods. It's still producing them. And the places where we'll probably see more of those goods flow are rich G7 nations, Canada being one of them. And these retailers are saying, well, if you want us to buy more goods, you got to give us a better price. So what could be a major inflationary shock in the U.S. could actually be a disinflationary shock to a certain extent in Canada if we can find things like the transportation capacity, port capacity, and warehousing capacity to take down those additional goods.
Right. Thank you very much indeed for joining us. That was Royce Mendes, Managing Director and Head of Macro Strategy at Desjardins.